G'day and welcome to this week's video. My name's Robert Gowdy, and this week we're going to have a bit of a chat around the cash rates and term deposit rates and consider how dangerous these products are over the longer term. Now, this is a topic that we've covered off a few times in the past. I think it's worth bringing up again, particularly given that interest rates are so low and the expectation is that they will be low for the next decade and a half or who knows. But our economy is not strong and therefore interest rates will stay low for a long time. The debt load at the household level really just couldn't bear much uplift in rates on their home loans, and therefore the Reserve Bank have been reducing the official rate, which has brought down the rates that people get on their term deposits. So a lot of my clients have been saying, we've got a lot of money in cash, what should we do? So I'm really keen to consider, how dangerous and risky it's been investing into what, in the short term is a very safe investment. But if you're holding cash and term deposits, conservative assets, for a long period of time, over decades, you're running a really huge risk. And I think one of the best ways that we can show this is just a simple graph of two investment amounts, dating a long way back to the mid 80s through to now. So essentially it's 15 time periods, but it goes back to the mid 80s. But if you had $1 million invested, this is the type of income you would receive, and the other figure is half that, $500,000 invested in a term deposit. So these are the rates that you would have had at around those times. So you can see that going through to where we're at the moment, the best rate that we can get for our clients is around 2%. So if we go back to around the GFC time, around this level here, just prior to the GFC that we saw, people could get a pretty comfortable 6% on a term deposit, which is 60 grand on $1 million or $30,000 on a $500,000 term deposit. We roll the clock forward now. It's been death by 1,000 cuts. It's just slow and gradual, as you can see. But now $1 million invested is going to give you $20,000 or even less. So compared to the days where you could get 60 grand, now you're going to get 20 grand or less. This is an absolute disaster. The risk of being so conservatively invested over this time has been substantial and a huge concern. And it should be a lesson to think about, what does cash do? And essentially, cash doesn't do anything. It doesn't provide a product or a service. It doesn't provide something that people need. Yes, it does provide a security, and I'm all for having good cash reserves. But when it comes to investing over the longer term, this is where we need to invest into assets, in my view, into businesses that produce a service or a product that people value and will buy, and then that business, say like Apple or Google or Facebook, have pricing power and can increase their profitability, and that will push the valuations up. So always have cash as a backstop. But if you've got money that is what you would consider long term and it's above the amount that you'd call a backstop, you're taking a huge risk in continuing to invest in that area. What you do get when we invest in the markets is short-term volatility. Now, I can show you another graph, but if you can picture the share market, the graph is like that on a daily basis. Always has been, always will be. There will always be crashes, there will always be corrections ahead of us. They're only ever just around the corner. The only problem that I have as an investor and as an advisor, I don't know what corner. So in the short term, we don't know what the markets will do. But I will invest and bet, not bet's a bad choice of term, but I invest in a way that in the short term, I have no say in what the markets will do, and it will be volatile, and some days I'll be down substantially. But if I'm more worried about next 5, 10, 15 years or the rest of my life, that is my investing time frame, I will bet businesses will outdo cash, which it has done over the last 100 years by far. So please consider that obviously the term deposit rates have come down. It's been something that's come up multiple times in the business here with clients. Consider the risk you're taking over the longer term with money that's more than what you need as a cash reserve. So please take that into account. Don't expect cash rates to jump anytime soon. And take care out there in the investing world. We'll see you soon. Thanks for listening. Bye.